Hey guys, Alessio, hope you're well. In this video, we're going to take a look at a very important crash pattern or a dropping pattern, which you can apply to any market, by the way, any chart. And this is actually going to be quite a useful pattern I'm going to show you in this video. And I'm also going to talk to you a little bit about Bitcoin as well later in the video as well. Before I start though, let me just say this, that some days ago, I decided, you know what, my hair was getting ridiculously long and bushy sideburns and a lot of hair here, and it's just getting unmanageable. And because all the barbers and all the hairdressers are closed, as I'm sure you know, during the lockdown, because of the national lockdowns in the UK and other countries, so barbers, of course, barbers and hairdressers are closed. So what I had to do, I decided, you know what, I can't handle this anymore. I don't want these long, bushy sideburns and, long hair. So I thought, you know what, I'm going to cut my own hair. It's quite possible maybe you're going through the same kind of situation as I did. So I thought, you know what, I'll watch some videos on YouTube about how to cut your own hair. And I have to tell you, I watched about 10, 20 of these videos. I did find one video which was quite useful, the one you're seeing here. I think it's from Alpha M. So quite a useful, interesting video. If you're interested, go ahead and watch it. And I also called a professional hairdresser and I got her guidance on WhatsApp. So I actually talked to this professional barber hairdresser, and she agreed to guide me through the process of cutting my own hair, which, by the way, was money well spent on that advice. Because let me tell you, if I was doing it myself without any guidance, it would have taken longer and I would have botched it up completely. Anyway, after several hours of cutting this and cutting that, I finally managed to put it into some kind of shape. And let me just tell you that Ella, the hairdresser who was helping me, wonderful lady, very patient, and I'll put the details for you in the description. By the way, I know some of you are probably wondering, Alessio, why don't you just get a clipper and just cut the whole hair off? Just go full head, skinhead. I'll be honest with you guys, I'm not in favor, to be honest with you, I've never liked the football hooligan / Mussolini appearance or look. I don't know, but that's just the way it is. Anyway, let's get on with the charts and Bitcoin as well. Before we talk about Bitcoin, let me just first of all mention that the first part of this video, I'm going to talk to you about a specific pattern which I noticed recently on the chart of Bitcoin, but actually you can apply this on other charts too. You can apply this to charts of stock markets, currencies, and other charts as well. And it's specifically about a pattern that I've mentioned this before, the ABC pattern. But it's actually more about how you can identify, how you can increase the probability of identifying the C wave, the final wave of the ABC corrective pattern. Okay, so as I'm sure you know, most corrections are composed of 3 waves called ABC. So after a major big move, like a trend or a rally, for example, you often see a correction, a corrective pattern. Okay, so most corrections or corrective patterns are composed of 3 waves called ABC. Again, in Elliott Wave Theory, the C wave of the ABC wave is the final wave, is the last wave before the trend then continues. Okay, so you have a trend, big move, then a correction, the ABC. After the C wave completes, then you have the trend continuation higher. Okay, so I hope that makes sense. So the question is, how can we better identify these C waves? And what I've found is, let me just give you an example. Just recently, we had the price of Bitcoin drop after it hit 10,000. About a few days ago, it hit 10,000. It dropped down to support. It dropped down to the trend line. It said that the C wave has likely completed in that ABC wave correction. Why? Because I've actually found this through looking at the statistical analysis of charts previously, that the C wave tends to be in this kind of a very sharp drop. Now I'm talking about C waves in a decline, not C waves in a rally. Okay, so not C waves that go up, but C waves that go down. So I found this specifically for ABC waves when they drop. Okay, so when you got a declining C wave, it tends to have a specific kind of pattern. Not always, but the majority of the time, it tends to have a very sharp, spiky move into support. Okay, so for example, if you have a price dropping in a corrective pattern, a 3-wave ABC pattern, what you should be looking out for to identify the C wave is a move. First of all, you want the price to move into a support region. A support region is obviously a very important level, a key level of support. All right, for us, recently the support level was a 21 daily moving average and the trend line. Okay, so price moved into that support, but on the lower time frame. So I went on a lower time frame chart. I think it was the 4-hour or the 2-hour chart. I can't remember, but essentially what I saw was a very sharp drop into that support. And usually I found the C wave to be very sharp, very volatile, and intense. So what tends to happen is the price in the C wave tends to spike down into support, break that support, and then quickly move back up it again. So you see this kind of spiky moves, as you can see here, for example, in this chart just recently. So often what I found through my research, that the C wave of a decline, it tends to be kind of a very sharp, spiky drop, especially in Bitcoin, by the way. We found this to be true also in the big major crash that occurred in Bitcoin and the stock markets back in March. So if you take a look at this chart of Bitcoin back in March, you'll see that big massive spike down. I actually said at the time, that I thought this was a C wave. I mentioned this in our member videos, that I said that this particular drop here could very likely be the C wave of that decline. Okay, why? Because again, very intense, very sharp, volatile drop, spiky move into support. The support level, by the way, was a 200 moving average, a 200 weekly moving average. It broke that level and then eventually went back up it again. A very spiky, volatile move. I've also found that C waves tend to be accompanied by acceleration extremes. I mentioned this before. So for example, when the stock market dropped back in March, that intense waterfall decline. So again, look for waterfall declines, very sharp, massive drops into support. You often see these acceleration extremes, actually an indicator I built some time ago, but you see these acceleration red and purple extremes often tend to be correlated with a potential C wave drop. Not always, but again, the majority of the time I've seen this to be the case. And again, so I hope this is useful to you, because next time you see a corrective pattern and you're trying to identify, is it A wave or B wave or C wave, look for the spiky, sharp drops into support, especially if they're accompanied with some kind of acceleration extremes as well. All right, guys. So that's kind of a crash pattern or a specific pattern that you can identify the C waves. In case you're wondering, well, how does this help you that you've identified the C wave? Well, because once a C wave completes, which in this case, just recently, I think it did complete on Bitcoin. Well, once you know the C wave's completed, potentially, then you could identify the next major trend in the market. Like, for example, the next 1, 2, 3 wave in the next major trend. Now, just to continue with Bitcoin here, it does seem at the moment that there's been a decoupling between Bitcoin and the stock markets. There was initially, we've seen in the last few weeks, some kind of, especially in the last, I would say, few months, we've seen this correlation, positive correlation between the stock markets and Bitcoin. But it seems recently there's been a sort of a decoupling between Bitcoin and the stock markets. Perhaps a good thing, I would say. But I would say just be cautious here. Because even though it seems Bitcoin is diverging from the stock market, Bitcoin has been going up quite nicely, but whereas the stock markets have struggled, the S&P has struggled to get much going to the upside. So even though there's some divergence between Bitcoin and the stock market, and there's some decoupling, it seems, I would say just be careful though, be cautious, because if the stock markets, and I say it's an if the stock markets see very strong volatility like we saw in March, if the stock markets plunge like they did in March, which I'm not expecting, but if they did plunge with huge volatility to the downside, that might actually put some downward pressure on Bitcoin too. But at the moment, there seems to be this decoupling between Bitcoin and stock markets. Let's hope it continues. But it also tells me something quite interesting. It seems that, whereas Bitcoin has been moving steadily higher, this also tells me that perhaps traders and investors are taking on more risk. So there's more appetite for taking risk, which is actually a good thing, a positive thing, perhaps not just for Bitcoin, perhaps for other markets as well. By the way, I'm going to make a separate video for you about the whole Bitcoin halving event that happened just recently. So I'm going to talk to you a little bit about that. There's some important lessons we can learn about that as well. All right, guys, so I hope this video has helped. If it has, please give it a thumbs up. And also please subscribe for future videos as well. Cheers, guys. Thanks very much. Bye for now.